Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the markets quiet down quite a bit after the last couple of days. I think Amanda may have remarked also about, I don't know if she's mentioned the markets in general, but I just saw here where she said, things have quieted down. That's true. They have. Um, One good case in point would be just right here with the dollar yen. After we had fallen and then kind of hung around there, we fell again. Then now we're kind of quieting down. We did see a nice little hammer bottom here on the 2 hour chart. We saw a little bit of a follow through on that. Now we're just kind of sitting here relatively quiet, um, to a certain extent, marking time. I don't consider the cable in that same thing because it hasn't even really moved. We're just sitting here. They're just waiting for another shoe to drop, which things appear to be getting worse there in regards to outlook. Um, and we've seen the S&Ps going and come back. Now, probably has helped coincide with you look 10-year notes. They got all the way down to 160, just unbelievable. I mean, just a hair under 160, but look at that. And we've seen a pretty good little rebound here, but boy, what a drop. Silver still holding up close to its highs. And well, look at gold, having gotten above 1,500 and kind of eased back a bit. But boy, what a super move there. Same thing here, correspondingly, the crude is, Boone has pared back a bit, and we did see a pretty good fall here in crude oil. I think it was Stelios had said in the chat room yesterday morning that it was screaming recession, or worldwide recession. Certainly, when you lose $8 in just a few days, you can't help but think that. I mean, it certainly looked. I mean, you can see, we used to be getting big moves in crude oil, and this was a pretty big one right here, $3. But then for the market to come back and then turn around and slide right back again and add on another $3, that's pretty huge. Um, and also the peso continues to hold around here. So we're going in. We can also take a quick jump to the cross rates. After a pretty good dip, really, that you'd have to say that'd be the truth, or that'd be the case with many of the yen pairs here. But certainly, like I said, we've seen some pretty big moves, and things have quieted down. They have quieted down. If you look at this, it's not like as if this is a 15-minute chart. These are 2 hour charts, and things have quieted down. After that big move, we talked about that a few days ago, how the market may need to digest and figure out what it wants to do. And certainly the yen pairs already made their big move. And right now, I guess we're kind of, for lack of a better phrase, market may be sitting here licking its wounds depending on what side of the market you were wrong. But we're going to get back into the main screen. Same here if you look here on the 2 hour chart. And take a look here with the euro, 11.98. So we've been trading basically, let's take a look here, basically a 20 pip range, or even less than a 20 pip range for what, 2, 4, 6, 8, for what, 12 hours or something like that. So things have quieted down quite a bit. Even the news is pretty light here also. So we'll get to that. Brexit nerves weigh on the UK employers. Switzerland's Adecco, which bills itself as the world's largest temporary staffing firm, confirms with its Q2 results statement today how much hiring sentiment in Britain is being hit by the Brexit uncertainty. It told Reuters that both temporary and permanent recruitment were falling as companies sought in vain for the clarity needed to push on with their strategies. Separately, a Reuters pullout this morning shows that Citi analyst expectations for a no-deal Brexit are rising. The median odds ascribed to the outcome are now 35%, up from 30% in July, and the highest since Reuters began asking this question 2 years ago. Here. Markets are swamped on Thursday with the not as bad as feared lines bringing stability of sorts in an otherwise super anxious investment world bracing for a trade war-induced recession on the horizon. Although China's trade surplus with the rest of the world construed to expand last month, exports rose unexpectedly, but the trade war asked as many questions as it answered. July generally saw a perk up in industrial activity around the world, but predates the latest escalation in Washington's tariff war. What's more, while exports to the U.S. fell, exports to other regional Asian economies picked up and will likely stoke U.S. accusations that Chinese exports to the U.S. are now being rerouted through countries such as Vietnam. Nevertheless, the members calmed markets alongside Washington's softly trade rhetoric. The People's Bank of China then set its target midpoint for the yuan weaker than the 7 per dollar for the first time ever, underlining this week's jarring slide in the currency. Even as spot and offshore rates stabilized at around 7.07. Even this was said to be better than expected somehow, so it aided the more stable environment. Overnight, Wall Street stocks indices clawed back deep early losses triggered by recession fears and the dash to safe haven bonds. The S&P 500 closed marginally in the black, and the VIX volatility gauge slipped back below 20%. 10-year U.S. Treasury yield also bounced from 3-year lows under 1.60 and firmed to 174.5 first thing Thursday. The yield curve between 3 months and 10 years remains deeply inverted at 28 basis points, although off the worst levels of minus 34 on Wednesday. Bond yields have been sinking around the globe. However, as recession fears mount, central banks easing goes global, and investors seek safety in top-rated long-term debt. The yield on the 7 to 10-year segment of the Bloomberg Barclays Multiverse Bond Index, the wildest catchment of global sovereign and corporate bonds as maturities, fell to its lowest level on Wednesday at 1.44, below the previous set in 2016. The yuan firm says PBOC signals intent to stabilize the decline. China's yuan strength against the dollar on Thursday, despite the central bank setting its official midpoint past the key level of 7 per dollar for the first time since the global financial crisis. The PBOC set the midpoint at 7.0039 per dollar. Prior to the market opened 43 pips weaker than the previous fix of 7.9996. While this was the weakest central bank fixing since April of 2008, it was firmer than the market expectations and seemed as a signal that authorities wanted to stabilize the decline in the currency following the week's sharp fall. Broad weakness in the official guidance rate came after heavy losses in the spot yuan as tensions between China and the U.S. spread to foreign exchange policy, with Washington earlier this week declaring China a currency manipulator. After the market broke 7, it was just a matter of time before the fixing broke the same level, said Francis Chung. The onshore spot market opened on Thursday at 7.0402 and was changing hands at 7.0425. Although the yuan stabilized on Thursday, onshore spot rate has been lost 2.1% of its value to the greenback since President Trump said last week he would impose fresh tariffs on the remaining $300 billion. And lastly, the dollar slips as market recovers. China data helps. Data showed Chinese exports rose 3.3% in July from a year earlier, while analysts had looked for a fall of 2% and policymakers fixed the daily value of the yuan at a firmer level than many had expected. Against the basket of currencies, the dollar was broadly steady at only 7.58. Recent comments from Chinese officials said they want to stabilize their currency, otherwise a sharp drop may fuel capital outflows. Indeed, market expectations for more than a quarter point rate cut from the Federal Reserve has firmly baked into the bond markets. The yen was a tad firmer at 106.18 per dollar. It touched 105.50 yen overnight, its strongest level since January the 3rd. The yen's appreciation versus the dollar may have slowed for now, but it stands to keep gaining in the longer term, said Junichi Shishikawa. Its other peers, the Antipodean currencies, have weakened severely and provides overall support to the yen. With that, we'll move on to the bias chart. Well, you can see here the euro's trading relatively quiet after the day before, not yesterday, but the day before, had that medium-legged doji. Really had the opportunity to move lower, and I was looking for potential. We could have moved deep down here before moving higher, but with the dollar slipping, U.S. interest rates falling, although the balloon was, but as we argued, there's more action for the Fed to take than the ECB, so certainly we saw that greater impact with the dollar, and also with the uncertainty that we're seeing here with China. Certainly opened the room for the dollar to move lower, hence what we saw the euro move higher. So we're trading in a relatively tight range, but once again, don't want to get caught with the pants down. I'm going to keep it at 1160. I don't want to go and move it up to 1185. I want to see this thing challenge and slide right back down. Now, it may not. Actually, you would look at this, it doesn't seem like we'd make that move. But if we do make that move for some reason, I'm going to keep this at 1160. I'm not going to change it at all. And on the upside, I'll just go for 1250. It's going to be very, very wide as the market figure out what it wants to do. Cable, no changes in cable because it hasn't changed. So there's no change there. We're going to move into the Aussie dollar. Got a nice little hammer bottom from yesterday. And support's going to be 67.28. And resistance will be 68.12. Let's go move into Kiwi. Resistance is going to go back up to this key level right here, 64.93, which was key on the way down. Obviously, we broke with the aggressive rate cut that they had a rate outlook. So it'll be 64.93 on the upside. And support's going to come in right there, 64.28. And moving into the dollar CAD. Saw this market bounce around yesterday. Um, Certainly, we're seeing a big impact driven with crude oil. So this pair, even though things have quieted down now, still has the potential to move quite a bit in light of what we've been seeing with crude oil. Not to mention also the dollar. So it's going to be quite the tug of war. Let's move this here. This 33.39 kept the market in check, and we're just going to stay with that 33.39. Now, we did talk about that. Overall, I think there's a potential for us to get up to 32. I mean, 30. Go back here on the daily. I think we can make it up here to this 33.82. But I was stating I thought there would be a pause at 33.39. Certainly, we saw that pause. Things may quiet down a little bit in the crude oil market, so it might allow this just to pare back a little bit further, but we'll keep the 33.39 on the upside. And on the downside, we did make it right down here at this 32.71, just about. We can go right there, 32.64. 32.64. Right there. 32.64 for support. Now, we talked about with the peso remaining a very, very strong buy once we broke up past this 1923.6, even though when you looked at this bar from the day before yesterday, certainly looked like it had the option, not the option, but the possibility to break lower, but or move lower. But we said, look, this is still a screaming buy. When we were looking for 1947 with potential, they could drop down to 1935, but as long as once we've broken past this key level, that's what everything was all about. Well, we have not pared back. This market has held up very, very well, even with things quieting down. Let's say with equities, the market still continues to hold up very, very well. So we're looking here. It's going to remain the 1947.6, and on the upside 1964. So we're not going to show any changes here for now. And we'll move into the dollar yen. Well, we talked about the yen, and I think that we're going to move to a new level in time. I think that's going to be 101.15 to I think it's 103.20. we point out then, and the reason behind that was we're just not seeing really a bounce in this market at all. Um, you can see here. So I think all we're doing is just moving. I think you could probably make the case even a little bit higher, but I think that we'll make that move. I don't know how quickly it's going to become, but the end has been some kind of currency, no doubt about that. But you can see here. Look at when you think about this. Look at the the S&Ps right there. Nice rebound, off of those lows. Look at that. Very nice rebound. But then when you look here at the yen, look at that. We're still hugging near the lows. So it can't, as I mentioned a couple of days ago, it can't, hang on to any kind of a bounce. They're just ready to just jump right back on it. We're going to stay, we had 586/27, so we're going to go knock off the 86, which we already went there, and go with 527. And on the upside, but I'm saying we're still keeping that 527. I think if they break a little bit lower, then I think we'll still find some bids here at that 527. Those things just also just turn completely south. But I'm saying in other affecting markets, let's say equities. But that being said, if we do drop, I don't say until we get a real fresh, um, I don't want to say reason, but something to drive this market. I think any dips there, they'll pick them up. Even though I believe we're going to move lower, look how much we've fallen. So you have to look at things in context. So can we move lower? I think we will eventually get down to that 101, that range of 101.15 to 320. That being said, are you going to turn around and lose 200 more pips after you've lost 400? I don't know. I don't believe so immediately. So I think if we do drop to new lows, I would look for that 527 to hold. That being said, as far as resistance, we'll go with six right there, 668. There we have that. Castell index. Well, now we've got our medium-legged doji here, right there. Once again, the old bulls don't have control, bears don't have control. Finish in the middle here. And what's been the prevailing trend up? Down. So it may just go and pair back. And that's what I'm saying is that why I think um, the market looks set. I'm talking about the euro for us to move higher, but it seems like it should have already capitalized on it. We shall see. It still may. So we may see one more challenge up here. I don't know what will be the motivation of the drive because you can see this was holding here, but once again, the key area is at 97.89. We'll look here. 2 on chart. So resistance will be 97.71. Supports back to 21. I think in time, I said that at the beginning of the week or on Monday when I did the basic technical analysis, might have been Tuesday, but I still think I think we're going to make it to 97, but I'll look for this 21. Well, actually, yeah, right here, this 21 just to hold. I was going to put it right there, but I think they would want to challenge that 21 just like here. But we'll see when it makes that drive. With that, we'll move into the cross rates. Well, things have quieted. Look at this on a 2-hour chart. Support right now is going to be right there at 67.85. Right there where we have it. We had 68.65, and you can see it looks like the market topped out at 68.71 or 68.72. Still potential for us to move a little bit higher if the yen quiets down. So we're actually going to move this up to 68.96. Once again, with everything quieting down, it's not just a matter of just looking at the 2-hour charts. Fairly quiet now. Move this down here to 18.45 on the downside for the euro yen. With the upside coming in right there at 19. Let's go 19.53. Certainly seen the big moves here in the euro Aussie. Right there at 66.51 for the resistance. As I said, not doesn't need to say that, but it's certainly very, very quiet. And 64, 65. We're going to keep it there. I mean, you can make the case right in here at 65.06, but after such a move, that wouldn't take much to get beyond that. So yeah, they won't hit it today, but just so that we won't be caught as with the pants down, we'll go with 64.72. It's a ways away, but after this move, certainly we could prepare that. And moving on to the Kiwi yen, Euro Kiwi. Give me 74.31 on the upside. It's going to be right there at 71.19. Still quite a ways away, but like I said, with the volatility we've seen, the yen takes one more dip, although I think that we'll, at least with the the yen versus dollar, I think we'll see some bids come in there. And it's not so much bids. I think it would be short covering if we challenge that 527. But like I said, we can still slide in here. So it may seem like this is a ways away, but certainly things start to, the yen strengthens again. We can quickly make that dip down here. That's going to be 71.20. And it's going to be 72.30. Move on to the guppy. You can see that coming off right across here, 28.40. And on the upside, right there, 29.72. So a pretty good wide movement yesterday here with the sterling odd. As usual, sterling quickly giving up its gains. I don't see where it's going to gain, but we'll be right there. 80.38. And support's going to come in right there. 78.88. Moving back into the main screen, you can see euro trying to edge up just a bit as the dollar comes back, but not a whole lot. As I said, we've been trading in a very, very tight range, which is kind of pushing the envelope just, well, I don't even call it pushing the envelope, but just kind of pushing a little bit higher here as the dollar index pairs back just a bit. It's going to be a relatively quiet session. As far as data, we do have the jobless claims. That'll be out. And wholesale inventories at 10 a.m. Eastern. We also have Canadian Housing Price Index. That'll be at 8:30 Eastern. Other than that, relatively quiet. As I said, we have seen a bounce back here with interest rates. One moment. But things have gotten quieted down after, quite the volatility. I think the market's just trying to catch its breath. If you take a look here with the 10-year yields, look at this, and we jump back, and now we're just sitting here, quiet as can be. Equity's just trading very, very quiet, unlike what we have been seeing. And gold still maintains its gains. This has no reason to go and let up at this point. Crude oil's come off those lows. So as I said, we're kind of getting in an area where the market's trying to catch its breath. I don't know if there's a big, obviously there's going to be a move coming, but I mean, think the market, we could end up, especially if we don't even have any data of note today, market kind of just hang around for a while and maybe going into tomorrow unless we get some type of catalyst to move us there. Um, well, there's a bias chart. I'll get that printed up. And thanks for joining us here on the European crossover.